of crypto investors never turn a real profit? That's because they keep making critical mistakes. Mistakes that drain their portfolios and leave them wondering why they can never seem to win. If you don't recognize these traps, you'll keep losing money while others capitalize on the same market you are struggling in. But stick with me because I'm going to break down the three biggest mistakes that can cost most investors to fail and, more importantly, how you can avoid them to secure your spot in the top 1%. Welcome back to Crypto Sovereignty. I'm Tone, and if you ever feel like you're always buying the high and selling low, you are not alone. Most crypto investors fail, not because of bad luck, but because of they keep making the same costly mistakes. They jump into the market unprepared, make emotional decisions, and fall into traps that wiped out their gains. But today, I'm going to show you how to avoid these mistakes and start thinking like the top 1% investors. But before we get into that, let's take a quick look at the markets. Are we seeing signs of recovery, or is there more volatility ahead? Let's check out the latest price actions and trends. And today's global market cap is sitting at 2.7 trillion. You got BTC dominance is sitting at 61%, ETH 8.3%. Fear and greed index, we're 33 fear. Altcoin season 17 out of 100. And so Bitcoin right now is actually back to where we were at, 83k. Ethereum 4% down the last 7 days. XRP got a big hit today, down 6% just today. BNB down 1%. Solana sitting at 129, pretty much sideways with the similar prices the last couple of days. Let's look at some positive news. We got Fidelity Bitcoin ETF makes a 97 million purchase of 1,120 BTC. Another positive news, right? Institutional demand grows. The growing adoption of Bitcoin ETF, including Fidelity, the acceptance of cryptocurrency within the financial sector, Bitcoin ETF traditional investors simplified a way to gain exposure to digital assets without managing the complexities of cryptocurrency storage and security. Fidelity recent purchase further emphasized its bullish stance on Bitcoin long-term potential. Even though there's not much of an impact of this market with what they're doing, large-scale investment like Fidelity ETF purchase can influence Bitcoin's market dynamics, while price impact of this particular acquisition may be minimal due to Bitcoin's vast market cap to reinforce the narrative of the institutional confidence. As more of the financial institution explored cryptocurrency investments, the growth of Bitcoin ETF is expected to continue. The other investors in the Wall Street that are afraid to get their hands into Bitcoin, just straight up buying Coinbase. So they're trying to get some exposure by just buying the ETF through Fidelity and other funds, right? That has to do with Bitcoin. For example, MicroStrategy, they're buying Coinbase stocks like that, right? So they're getting some exposure. We're not saying in the price action that we want, but we got a lot of financial institutions in the TradFi side that are investing into crypto in a different way, right? And you get the masses in the stock market investors right now getting involved by just buying the ETF. And also, if you look at GameStop recently, a couple of days ago, now they added Bitcoin in the balance sheet, which is a good thing. So these are positive news, guys. All right, now that we've seen what's happening in the markets, let's talk about why most investors fail. The truth is, there are three major mistakes that keep people stuck. Mistakes that separate the losers from the winners, in my opinion. If you are making even one of these, it could be holding you back from the real success in crypto. Let's break them down one by one. Mistake number 1: chasing hype instead of researching. One of the biggest mistakes investors make is buying into hype. A coin is trending, influencers are hyping it up, and suddenly everyone is rushing to buy. The problem with this, by the time most people hear about it, it's already too late. They buy at the peak, and then the price crashes, leaving them holding a bag all the way down. But how to avoid this? Instead of following the hype, do your own research. Look at the fundamentals, who is behind the project, what problem it solves, and if it has real long-term potential. If a coin is pumping just because of social media hype, chances are it's a trap. The top investors don't chase trends, they spot them early. Now, mistake number 2: panic selling in the volatility. Crypto is one of the most volatile market in the world. Beginners buy in when prices are going up, but the moment the market dips, fear takes over, and they sell at a loss only to watch the price recover later. This emotional cycle keeps people stuck, never actually making gains. And how to avoid this? Successful investors understand that volatility is normal. Instead of reaching emotionally, they have a plan. Set clear price targets, know your risk tolerance, and remind yourself that dips are part of the game. The top 1% investors don't panic during these times of crashes. They use them as buying opportunities. Mistake number 3: following bad advice instead of learning. Have you ever bought a coin just because someone on X or YouTube said it would moon? Many investors rely on hype and influencers instead of developing their own strategy. But here's the truth: no one cares about your money more than you do. And if you're blindly following others, you're setting yourself up to fail. This is why I keep emphasizing in this channel: make sure you do your own research, look at the coin, and make your decision by your research, right? Now, how to avoid this? Start learning how to analyze project yourself, understand tokenomics, read white papers, follow developers, not just influencers. The investors who succeed long-term are the ones who take the time to educate themselves. When you take control of your knowledge, you stop making blind bets and start making smart investments. Most investors fail because they repeat these same mistakes: chasing hype, panic selling, and blindly following others. But now you know how to avoid these traps. The difference between failing and being the top 1% is simple: learn, plan, and stay disciplined. With all that being said, if you got value from this, make sure to like, subscribe for more insights on how to build long-term wealth in crypto. And if you want to know which altcoins have strongest fundamentals right now, check out this video on top. I'll see you guys in the next time. Peace.